Hello, my awesome accounting students. There are two major parts to this chapter. The first part of the chapter dealt with recording transactions under the expanded accounting equation. Can you take a minute to remember what that equation looked like? The second half of the chapter is devoted to the recording function of the financial statements. In other words, how do we communicate the results of what happened to our business to the users of the financial statements? There are three basic financial statements that we will be covering in this course. The income statement, which shows the results of operations over a given time period. The statement of owner's equity, which shows the changes in the owner's capital account, and the balance sheet, which ensures that the fundamental accounting equation is in balance and proves that the assets of the company are equal to the liabilities plus the equity. Let's take a look at each one of these three in more detail. There is a specific order in preparing the financial statements. The income statement is always prepared first. Why? Because the bottom line of the income statement is necessary in order to prepare the statement of owner's equity. So a few things about the income statement. It only includes revenues and expenses. It shows whether a company was profitable or not. This, of course, is key to the owner and to many other external users of the financial statements. The bottom line, or the last line on an income statement, is one of two things. It's either a net income or a net loss. This is a summary of all the transactions that were covered in Chapter 2. Take a look at several of the transactions and test your understanding by describing what happened in each of the transactions. I'll get you started. In the first transaction, the owner invested cash. This caused the cash account to go up and the capital account to go up. In transaction B, we can see that the company purchased equipment using cash. How do we know this? The equipment went up by $5,000 and the cash went down by $5,000. In transaction C, the company purchased equipment on account or on credit. How do we know this? We saw both the equipment go up and the accounts payable go up. Remember, after every single accounting transaction, the fundamental accounting equation needs to be in balance. That is to say, the asset side of the equation has to be equal to liabilities plus equity. So when we prepare financial statements, we start off with the fundamental accounting equation and work backwards. For example, our first statement, the income statement, will show the summary of the revenues and expenses located on the far right-hand side of the equation. The statement of owner's equity will focus on the change in the owner's capital account, and the balance sheet will prove that the assets equals the liabilities plus equity. So let's get back to these financial statements. The income statement shows the results of operations over a given time period. In this circumstance, you can see that it's for the month ended December 31st. It shows that the revenues generated by the consulting service were $47,000, and the expenses incurred in generating that revenue totaled $8,650. Because the revenues are greater than the expenses, we see that the bottom line is a net income of $38,350. Some other things to note about the income statement. All three financial statements will have a 3-line heading. These can best be summarized by who, what, and when. The who is the name of the company. The what is the name of the statement, in this case an income statement. The when is either a period of time or a snapshot at a specific point in time. As you see on the income statement is for a defined period of time. Some other things to note on the income statement is that there are 2 columns for numbers. The details go in the left and the totals go on the right. Some other things you may want to notice are sometimes single underlines are used and sometimes double underlines are used. The single underlines are to let the user know that a mathematical operation is being performed. The double underlines are used at the end of the statements on the income statement and the statement of owner's equity, and at the end of assets on one side of the fundamental accounting equations and liabilities plus owner's equity on the other. You will see this on the balance sheet. Now on to our second statement. The statement of owner's equity, for some reason, typically gives students the most trouble. This statement shows the changes in the owner's capital account or his net worth. It's sometimes called the bridge statement because it's the bridge between the income statement and the balance sheet. Why is this prepared second? Because the net income from the first financial statement is carried over and needed on this second financial statement. That is, the net income from the income statement is used to increase the owner's net worth. The other reason this is called the bridge statement is because the ending capital from the statement of owner's equity flows over to the balance sheet. Again, thus the word bridge. The person who's the most interested in this financial statement is probably the owner. And what every owner hopes to see is that his ending capital at the end of the period is more than what he started the period out with. So back to our expanded accounting equation. What's left? We've shown that the company was profitable by preparing an income statement which summarized the revenues and the expenses, so we can check that off. We've also shown that the owner's capital increased over the accounting period. In other words, he ended up with more than he started with. And so if we look at the expanded accounting equation, what's left is to show that our accounting equation is in balance. In other words, we will show and prove that our assets are equal to the sum of the liabilities and the equity. Let's take a look at the balance sheet. That brings us to the balance sheet, the last financial statement that we will cover in this class. And again, the purpose is to prove that the fundamental accounting equation is in balance. Take a look at the balance sheet and notice a few items. Assets are the types and amounts of property that the business owns. The liabilities are the debts that the company owes. The owner's equity section shows the ending balance brought over from the statement of owner's equity. A couple other things to note on the balance sheet. Notice that this is the only statement that has a set of matching single lines before the math operation and double underlines to show that both sides of the equation are in balance. Once again, the purpose of the balance sheet is to prove that that fundamental accounting equation is in balance. One last thing to note on the balance sheet is that it is the only statement out of the ones we've learned so far that is at a specific date or point in time. This is unique to the balance sheet. In summary, many people depend on the accuracy and reliability of financial statements. This is a foundational chapter. We will be using all 3 financial statements in every chapter for the rest of the semester. In fact, we will continue to build upon them as the semester progresses. Take the time to learn them now. I can't overemphasize the importance of taking the time to learn each and every one. This is one of the 2 foundational chapters for the rest of the semester. Please make sure that you spend adequate time practicing. This is Professor Johnson signing out.